Good morning. I'm Justin White, and this is your Inside Pass. We'll get to your market update in just a moment. But first, let's bring in today's insider. It is time for our monthly deep dive inside the markets as we bring in Andrew Lockman from our capital markets team. Andrew, good morning.
Morning, Justin.
Well, we had a doubleheader yesterday with CPI in the morning and then the Fed in the afternoon. So what was your take on the way it all played out yesterday, Andrew?
Yeah, so the inflation data that came out in the morning was lower than expectations, and the market reacted pretty favorably to that. We had a very strong lock volume on the back of the improvement that we saw in rates. And then we got the Fed in the afternoon. They left rates unchanged as we were expecting. And Powell did kind of pump the brakes a little bit. He tempered the expectations a bit after the excitement that we saw from the data that came out in the morning. And they ended up actually lowering their projections for 2024 from 2 cuts to 1, but they did raise their expectations for next year from 3 to 4 in 2025.
Andrew, I want to ask you now about what we've seen with mortgage rates over the last couple of weeks in terms of the impact that inflation has had on rates and then also labor numbers. Tell our clients what they need to know.
Yeah, so there's really 2 things at play here. The Fed's really weighing moving too quickly versus waiting too long. And the risk there is if they move too quickly with cutting rates, they're afraid of reversing the progress that we've made on inflation and seeing a spike in prices versus waiting too long and potentially risking the U.S. economy dipping into a recession. So really, we've seen a couple data prints over the last few weeks that have caused different reactions in the market where bad economic data can actually lead to an improvement in rates where a bad news is good news type of situation. And then actually inflation, if that comes in lower than expected, we'll also see an improvement in rates, which is more of a good news is good news situation. So that's why there's really 2 different things that you have to understand when you see the economic data come out and how it's ultimately going to impact the market. But Jerome Powell, he kind of stuck to his script and he said that he continues to want to see more good data before they cut and continue to see inflation trend towards their goal of 2%.
Well, we know you'll continue to keep an eye on all of that data for us. Andrew, great stuff. Thanks for coming in this morning.
Thank you.
Andrew Lockman with our monthly market commentary. And now let's get to your market update. As of 8:40, mortgage prices are 7 basis points better than market close yesterday. Stock futures are mixed this morning after the release of more positive inflation data. Treasury prices are better this morning, with the 10-year yield trading at 4.26%. In today's economic news, the producer price index came in lower than expectations, showing wholesale prices dropped 0.2% in May. On the labor front, initial jobless claims came in higher than expected, with 242,000 new claims added last week. That's all for today. We'll see you right back here tomorrow.